Welcome to the daily update, where I'll go over the action in the market from Monday, April 1st, and then we'll see how things look for Tuesday, April 2nd. Had a bit of a pullback. We actually came up off of the lows, and that's always encouraging when you're more positive on the market. As of right now, it looks like this is a pullback. We'll keep a close eye on things. We'll reevaluate them day by day. We're not really seeing an overall shift in the market climate right now, but interest rates really spiked up, and that pressured stocks because the ISM manufacturing report came in much hotter than expected. Everything before that, including going back to last Friday, was more market friendly. We had the core PCE price report come out. That was in line with expectations. Jerome Powell said things that didn't really shake up the market. But then when the ISM manufacturing report came out, that was quite a bit hotter than expected. That shot interest rates up, fearing that maybe things are going a little too fast to the upside, or as far as growth is concerned, and that put some pressure on stocks. Before I get started, I've now posted 2 videos about the proposed program that I'm hoping to launch in June. There's now a part 1 and a part 2. If that interests you, please feel free to check that out. Let's go back and talk about what happened. We did have a higher open. It looked like, okay, the futures were fairly positive when we started trading Sunday afternoon or evening because of what happened on Friday. We made it through the Easter holiday weekend without any significant terrorist attack. And so we were up about 0.25% to 0.3%. And then that helped stocks initially start off well. Now, the ISM, it came out before the market even opened, and that brought the futures down, but we still had a higher open. We were able to get up to R1 at 52.64. Then we declined below the unchanged level and the daily pivot at 52.55. As the day went on, prices fell below S1 at 52.45. We went down below S2 at 52.36. And it looked like, okay, we might be seeing some weakness really coming in here. But we were able to find support at 52.30, not just one time, but 2 times. That's like an intraday double bottom. And so we bounced back up from that. We got back above S2 and closed just a little bit below. That should be S1. When we got done, we were only down 0.2%. So really, that's not that big of a decline. We're still below average with volume, though. And we are positive with our technicals. Right now, it just looks like a pullback. But as I said, we'll keep evaluating things as they unfold. And it was about inflation, meaning that the core PCE report came in hot. I'm sorry, the ISM manufacturing came in hot. That pushed interest rates up, pressuring stocks. And value, which had a good week last week, that really took it on the chin as well in Monday's session. Growth held up a little bit better than value, but it's not like growth really did all that great on its own. Some comments that we can make. Growth did outperform value, and the NASDAQ and NASDAQ 100 actually had gains on the day. So they were up, and that's more growth areas. And last week, the NASDAQ 100 ended up being down on the week. So the fact that it was bouncing back up a little bit gave the market some support. And small caps, which were the strongest index last week, being up 2.5%, they gave 1% of that back in Monday's session. The ISM manufacturing was stronger than expected. Our short-term list is getting a little bit shorter now. We still have the Williams percent R, the CCI 20, and the stochastics that you can take 2 ways. They're looking overbought, meaning they're extreme positive, or it's just showing that we've had good momentum. In the intermediate term, the list is also getting a bit shorter. We have the 50-period exponential moving average and the PMOs and all the different oscillators that we watch, the Sean trend meter and the bullish percent index. Long term, we still have the 150 and the 200-period moving averages that we follow are looking extreme. And this scenario has not changed. It's pretty much what Jerome Powell reiterated on Friday, that the Fed is likely done raising rates and looks to possibly cut rates 3 times in 2024. The dollar was up. It was up pretty strong, and that's also putting some pressure on stocks. And interest rates climbed all the way up to 4.33% for the 10-year yield. The 10 to the 2 and the 10 to the 3 month, those yield curves are still inverted. Sentiment actually ticked up, and it depends on when you load the CNN Money website. I get different numbers all the time. The latest reading was at 72. It actually ticked up from the previous close of 71. But if you refresh the site, you get different numbers. So I'm not sure what to make of that. Our trend is still positive, but we're showing the ADX drifting lower, kind of more below its moving average, although it's still above 20. With the down day, our bias is negative, but I'm still keeping our momentum at positive for right now. The economic reports that came out, and some of these charts that I'll show you will also include what came out on Friday. We had the S&P Global Manufacturing Index. It came in above 50. This is not a real influential report. It was at 51.9, down from the 52.2 we saw last time. This was the big one, the ISM Manufacturing. They expected it to come in at 48.5. It came in at 50.3. That's above 50. That's showing expansion. That's good from an economic standpoint, but it came in a lot hotter than expected, and that kind of freaked out the market. Last time we had the report, it was at 47.8. And then we had total construction, not a real influential report, but something we like to keep an eye on. It was down 0.3% on a month-over-month basis. They expected it to be up 0.6%. Last time it was down 0.2%. When you compute that out to a year-over-year basis, we're up still 10.7%. You break it down a little further, total private construction was unchanged from the previous month, where public construction was down 1.2% month-over-month. Here are some charts. This is going back to Friday. This is the PCE price index month over month, where it was up but down from the previous reading that we saw. This is looking at the core inflation rate, where we're seeing a gradual decrease here, and that's what the market likes. And then we see the annual rate also decreasing as far as the index is concerned, and the market is okay with that for right now. It just came in hotter than expected. Here's the manufacturing PMI. We're above 50, and we actually declined a little bit from the previous month, but this is showing an expansion here. Here's the ISM, and this is what concerned the market. We had the total reading, which went back up, and it's above 50. Again, you could take that as positive because it is above 50, but it's, like I said, greater than the market had expected. And we also saw an increase in the orders. The prices and deliveries also saw an increase with prices, and we were flat to slightly declining with the deliveries. The trade also was pretty much flat when we look at exports and imports on this chart. Here's the bar chart that we show here, showing how it did spike up to a little bit over 50 with the latest reading. Then construction spending did decrease, but it's still above that 10% level on a year-over-year basis. And then here is private construction, where we're showing residential going up and non-residential going down. And here's the month-over-month change, where we are seeing a bit of a decrease here. I have some kind of weird charts to show here from Isabel Net, because it's one of those days when they didn't update their blog on Friday, but they did on Saturday, but it was after I recorded the weekend videos, so there's kind of a mishmash of different charts here. This is the equal weight S&P PE. It's expanded up to 17 times earnings. It had been around the 15 to 16 level. Not necessarily a real concerning thing when you look at the broader market, because we're still above that 20 level. And then the model that somebody came up with here at Goldman Sachs, they think we should be right around at the 15 level. And then this is put out by Carson, a bunch of numbers here. The takeaway is down here when we look at the average and the median, where two big quarters aren't bearish. Now, we had a positive fourth quarter in 2023, really solid for the market. And we've just finished the first quarter of 2024, also really solid. Going forward, what does that mean? Well, we're up 71% of the time, one quarter, and also two quarters, and even looking better if we go out 1 year with pretty good returns going forward from here. Then this is showing that what happens if the Fed cuts rates and we're not in a recession. Look down at the bottom. Here's the average, where 3 months before we're up 2%, 3 months after 10, 12. And the further out we go, the better the returns end up looking. I didn't really find anything on Twitter. A lot of people posting stuff, but really just didn't Nothing really all that fascinating that I ran across. This is the cycle person, this Alan Remenek that we've been following lately. It's a little too cosmic for me, but just because what he's been saying lately kind of tends to mirror what we're seeing in the market right now. So I'm just checking this out. I'm not into the planets aligning and the stars and Venus and all that stuff. It's just too far out there. But some people put a lot of weight in this. And this is more updated now, where this is after Thursday's close, when we closed at the all-time high with the S&P, and we could be seeing a bit of a decline here before we see some kind of a bounce going into about the 10th of April. And then after that, according to these cycles, we could see a decline going into about the 24th of April before we see a nice advance going into about the latter part of May. We'll just see if things line up with this or not. Some people, including myself, kind of see this as, voodoo and all that other garbage. But hey, if it's kind of sticking with what's happening, I'll check it out for a while and we'll just see if there's anything to it. You may disagree with that. You may think that there's something to this because there is a mathematical process and to the whole universe. I mean, that's where we get Fibonacci numbers from and so forth. So I don't want to totally dismiss it. It's just I've listened to some of these kinds of folks before, and they say this and this and this are going to happen, and then it's like the opposite ends up happening. I just like looking at the charts that we look at. Here's our intraday chart where we did have a higher open. We got up to R1, but that set the high for the day. Then we saw some selling coming in. We went negative. We dropped below the daily pivot. We went down below S1. We actually broke down to S2. We found a low at the 52.30 level, came down, hit that twice. So that's kind of like a double bottom. Then we're able to bounce up off of that and then saw some buying coming into the close. We were above S2, but we closed below S1. Here's the intraday chart where we were looking pretty good when the futures first opened. The market was quite positive, but we kind of set the high right after that and then just drifted lower going from there into the cash session. And we're down just a little bit in the initial overnight session. We saw a little bit of an improvement here with growth. That's the blue line over value, but not a real big change on the intraday chart. We did go back up with our intraday ratio with S&P growth to value. So, and it wasn't so much that growth showed strength, it was that value saw more weakness. Here's our end of day chart where growth was up a little bit, but you see how value was down quite a bit more. It was down less for the mid caps and down less for the small caps. It's really the large caps where this was more dealt with. But we're still seeing a decline when we look at small cap growth to value on the ratio here. This is a little bit of a concern. We're also declining a little bit still when we look at mid cap growth to mid cap value, even though it just ticked up a little bit here. And we turn back up slightly with the S&P growth to value ratio. We're still on a longer term uptrend, but we have been falling back lately. And here's just looking at growth versus value on a bigger picture with an end of day chart here with the large cap growth and small. This is not growth to value. This is large cap versus small caps. And then discretionary is still in an uptrend. Staples are in an uptrend. The ratio didn't really change all that much. Here's large cap growth where we were up slightly, but not enough to set a new all-time high. Our trend is still pretty weakening right now. It's kind of right on top of the moving average. It's still positive because the green line's on top. And we're seeing pretty much that same thing in the short term. And we're continuing to drop off with volume. You might expect that after the holiday, that volume would really pick up. It didn't. We were below average again. Sentiment, here's the weekly chart that we usually look at, showing that when you take a lot of different measures together, we're still looking rather extreme positive. This is a chart that I usually show over the weekend. This is one of the ones that didn't get updated until this video. These are the active asset managers, and we're getting a reading above 100, and that's pretty excessive. And when we get to this high of a reading, that's when we like to use this as a contrarian indicator. This hasn't been updated yet. We're coming down. We're at 3.99 in the latest reading. This will be updated in the next day or two. And the VIX did go back up with the declines that we saw. We're actually coming back up above this upward sloping trend line. We also saw the bar chart pick back up. So stocks were going down, the VIX went up. We're seeing a pickup in volatility of the VIX as well, where we're coming back up. Even though we came down off of the highs, we're still turning back up when we look at the line chart. The skew index is still giving us a reading here. We're still up in this red area. Whatever happened in Monday's session was not enough to take us back down from this red area, at least yet. We turned up a little bit with the momentum of the VIX, but we're still declining overall. And the equity put call charts, they were not updated. I waited and waited, and they just have not updated. The volatility risk premium did turn up a little bit with the down day, but we're still in this overall range. So we're not getting any kind of an extreme reading here. We turned down a little bit with the advanced decline line based on price and a little bit less based on volume. This is what I've been noticing in the charts. When we have up days, volume is outperforming price. When we're having down days, volume is down, but not as much as price. And that could be under the surface positive. And with our new high, new low study, when we had that higher open, that kicked in some new highs, but we're still trailing off now. We're flatlining at the top of the 5 period, and we're pretty much flat right now with the 10 period. We're still looking okay with our advanced decline ratio. These are looking positive both in the short and intermediate term. Saw a little bit of an improvement here with the accumulation distribution, but we're right just a little bit under the moving average. This is a little bit more concerning. The Chaikin money flow has been declining. It's even turning more negative as the S&P has been going up. This is another smart money indicator. The Chaikin oscillator did tick up a little bit, but it's still below zero, so it's still negative. And we are showing the cumulative price for the S&P. It came down just a little bit, but you notice it really didn't come down all that much when we look at the volume indicator. Looking at our advanced decline line studies, we came down with the NYSE common stock, the S&P, mid caps, and small caps, pretty much across the board there. Here's our daily chart, where not a lot of damage was really done. We're still below this one pivot point here, but we have another pivot underneath us if we continue to fall that may act as support. On the bottom, we are below average with volume. The Williams percent R did come down, but is still extreme positive. The CCI 20 also came down, but is still extreme positive. We're still above the 20-period simple and exponential moving averages. That hasn't changed for right now. It's positive while we're above this. If we start to see a decline, we'll be seeing if this ends up providing support. Also, looking at the 20-period simple moving average of the open, high, low, close, we're above this mini rainbow. If we come down, will one of these lines end up providing support? We're no longer extreme with the 20. We're still extreme, but turning down with the 50, and we're still extreme with the 200-period exponential moving average, just based on the price of the S&P 500. The force index did decline. We're right about at the midpoint, but it's still positive. We're still extreme, but turning down with the short-term stochastics, still advancing in the intermediate term, and still extreme in the long short-term stochastics. We're no longer extreme with our standard deviations chart. We came down into the +2 channel. So this is still positive and not necessarily extreme positive. Intermediate term, we're dropping a little bit below zero now with the balance of power. That's turning a little bit more negative. The go, no-go system is still positive with the dark blue bars. We're still looking okay with our highest high value. We're above an advancing midpoint. The TTM squeeze is still positive with the lighter shade of blue bars. The ease of movement actually turned up slightly and we're above zero, so that's positive. The Arun came down from giving us an extreme positive reading as we saw an increase in sellers and a little bit of a decrease in buyers, but we're above zero, so this indicator is still positive. We're dropping below zero with the S&P McClellan oscillator, so that's going to have an impact on the summation index. We're just barely starting to turn down based on price, but we're still going up based on volume. And we're dropping, but still positive with the NYSE McClellan oscillator. So we're still going up based on price, and we're looking a little more healthy based on volume. Even though volume has been below average, most of the volume seems to be coming in and actually doing some buying. We are going lower with the Swenlin trading oscillator based on price, where we turned up based on volume. Again, we're seeing volume a little stronger here. However, taken together, both of these charts are still positive. We're just flatlining here with our oscillators. We're just a little bit above the moving average based on price. We're looking more healthy based on volume. We declined a little bit with the PMOs that are rising, turned down with the buy signals, and we're flatlining and looking rather extreme with the PMOs above zero. We switched over to neutral for the Elder's Impulse system for the S&P. We're still positive with the parabolic SAR. The slope oscillators flatlining, looking just a little bit more on the positive side, but we're at this green level, which is an extreme positive reading. The MACD came down just a little bit and is pretty much on top of its moving average. So we're still flatlining with pretty much all of our oscillators right now. We're above all the plotted moving averages that we have here, and that's still looking positive. And even with the down day, the bullish percent index continues to go up. So that is positive. We're still going up with the NYSE bullish percent index, and we turned it back up with the NASDAQ 100 bullish percent index. This had been showing some weakness over the past week. The fact that the big stocks did a lot better and the NASDAQ 100 did better, that's a little bit encouraging. We're still above 50, and even though we ticked up just a little bit with the money flow index, this is positive. We're declining, but still above 50 with the ultimate oscillator. And the vortex, it did go back up, but we're seeing a real weakness overall when we look at this longer term. The RSI is still looking positive based on 14 and 9 periods, even though both of them did decline. We're still positive with on-balance volume. We're above an advancing moving average. We did come down from our 20-period moving average study of those stocks in the S&P 500 after getting a pretty high reading here. And we came down with our 50-period moving average study as well. We turned down just a little bit, but we're still showing really good momentum with our 100-period moving average study, and came down after giving a very high reading with the 200-period moving average study. The copy curve, maybe it's a little bit above the moving average right now, but it's pretty much flatlined as well. We're also flatlining with the Sean trend meter, but still getting a rather extreme reading. On a trending basis, we're still positive with the Heiken Ashi. The Kagi chart is positive, the Renko chart is positive, and the 3-line break is positive. Longer term, looking at a short-term chart, I know I put this in the wrong place, but I keep doing it all the time. We're still underneath this blue trend line here. And that's why we're keeping an eye on the 20-period moving averages. If we do see more weakness, we'll be watching the 20 periods, the 20-period moving averages to see if they provide support. We've been seeing the same thing for quite a while now. We're above this R1 level on the S&P weekly chart. We came down just a little bit. If we really start to fall, we'll be seeing if this ends up providing support. We're still looking extreme with the 150 and 200-period moving averages. We're still positive, though, with the Keller market model across the different indexes and time frames. And this is kind of strange. They said on the 23rd of March that we switched to an up arrow. I looked at it, and now it's the same date, but it's turned to a down arrow. So I'm not quite sure what to make of that with the decision point scorecard. Everything that happened was positive, where the NASDAQ saw a good start to the day. The communications sector set a 2-year high, and the dollar, which is pressuring stocks, so this could actually be taken as negative, it didn't close. I'm not sure. We'll have to look at the chart. I don't think it closed above 105, but we're seeing some strength in the dollar right now, which could be pressuring stocks. The equal weight and the S&P weighted index are both holding up for right now. We came up with the ratio since the large caps outperformed the broader market. We did see a decline with the Dow, but we're still above this pivot point. We've switched over to neutral with the diamonds when looking at the Elder's Impulse system, and we were up slightly with the NASDAQ. We still have this pivot point underneath the support and this R1 level above us as resistance, and seeing kind of that same thing. We have a pivot point below the NASDAQ 100, and we have an R1 resistance level above current price. We continue to be neutral with the QQQs when looking at the Elder's Impulse system. We're still negative, though, when we look at the momentum of the NASDAQ 100. If we could really see a good, solid upward move, it might turn this indicator around, but that hasn't happened yet. When we look at the chart of the QQQs, we're still above the 20-period moving average, which means we're also above the 50 and the 200-period moving average. Small caps, of course, they had to give some of that back, and that just frustrating if you've been involved in the small cap index. and we've switched over to neutral with the small caps with the Elders Impulse system. We also declined with the Russell 2000 small caps. We still have a longer term uptrend. We declined, but we're still above 50 with the RSI. The momentum continues to be positive. The mid caps also decline, but we could come down and set this and see some support at this previous pivot level. If we fall below that, we'll have the pivot level for the month of April below current price. We switched from being positive over to neutral with the mid caps looking at the Elders Impulse system. Apple was down and is in a downtrend, or Tesla was down and continues to be in a downtrend. Nvidia, it was pretty much unchanged, and it's been chopping more or less sideways, but it's still in a solid uptrend. And Google is now setting an all-time high. So it was up over 3% in Monday's session. The FANG index is pretty much chopping sideways. We're kind of near the high end of this sideways range that we've been in. The financial sector was down, but continues to be in an uptrend. The dollar, I guess it did close just barely above 105, and this could be pressuring stocks like a weaker dollar. When we look at the S&P 500 and compare it with world indexes, we're seeing a bit of an improvement with the 10-period correlation and a gradual improvement here with the 50-period correlation. We did really go up with the 10-year yield, and that was really the deciding factor that sent stocks lower. So we declined based on price of the 10-year ETF. We're still not showing a lot of strength here. When we look at the ratios between the Qs and the S&P, discretionary to S&P, and large cap growth versus large cap value. So we're seeing more of a decline right now with the large caps, mid caps, and small caps. So what's our outlook for Tuesday? And there's this thing coming up. I don't know if it's going to be a big deal or not. I tend to dismiss this stuff, but I feel I should bring it to your attention anyway. There's going to be a total solar eclipse on Monday, April 8th. And you got people that are freaking out about that, and they might be returning to their mother spaceships and things that have happened before. The Hale-Bopp comment thing, if you remember that back in the 90s. I don't know if this is going to be a big deal or not, but just be aware of that. The technicals are positive for right now, but we're pulling back. We haven't really changed our overall climate to this point. We will just get factory orders, and I guess, we're going to get the JOLTS job openings as well. And then we want to keep an eye on all the craziness going on in the world, but it doesn't seem to be really impacting the market. On Wednesday, we're going to get the ADP employment change. The big report is going to be the jobs report on Friday. And here's what's happening on Tuesday, and then the rest of the economic reports coming out this week. Seasonality, we are positive for April 2nd. We were positive for Monday, April 1st, too, but we're even looking a little more positive on the 2nd of April, right at the beginning of the month. And when we look at this during an election year, we do see some positive seasonality with the green dashed line. But I'm not quite sure what to make of the overall seasonality. We just did not follow this in March. So far, with only one day done in April, we haven't been following it in April either. But on Tuesday, that tends to be a more negative day, not as negative as Wednesday when we compare what happened in 2023. But when we look at the month of April together, of all the different things that we measure, going back from to 1950, the past 20 years, 10 years, and during an election year, April tends to be positive. So our warning signs, the Chaikin money flow and the Chaikin oscillator are negative. And we still have these negative divergences that we're keeping an eye on for right now. And the PPO for the NASDAQ 100 continues to be negative. The positive signs, not really sure about the equity put call ratio now because that was not updated. However, the parabolic SAR is positive. The vortex is positive, but it is showing some weakness. The bullish percent index for the NASDAQ 100 is above 50 and did go back up. Small and mid cap growth are positive, but showing some weakness. Large cap growth is holding up, but has been underperforming. The financial sector was down, but still continues to be positive. So our conclusion, for right now, it just looks like a pullback. We'll see if there's more follow through selling in Tuesday and Wednesday session, that may change. But for right now, it just looks like a normal pullback. In the short term, it looks like a pullback. We're still above some shorter term resistance that we got above back in March. We're still above those levels. and we're still above the longer term resistance at that weekly chart at the 5110 to 5111 level. We're still positive in the intermediate term. We still have, it's a shorter list, but we do have a list of things that are overbought. We're still positive in the long term, even though we're looking extreme with our 150 and 200 period moving averages. Thank you. I really hope you found this helpful. Have a really good day, and I will talk to you in the next video.